Okay, so very good morning to all of you and welcome to this session for your exam oriented batch for your CA final FR. Now this is a fairly wonderful subject and we are going to cover the entire course over here. All your questions and all your topics and concepts would be done. So essentially you would be getting 4 main books. First you would have your FR Shield, which is a concept book, and then there are 3 volumes. These are the same volumes that is there in the regular as well, and hence you don't need to review anything beyond this. In terms of your coverage, it will be fully updated all the way up to your exams. In case there are any new sums or questions, we will share that on your Google Drive or it will be there on YouTube in any case. Okay, so we'll run through the important parts of your syllabus first and then we will go into the first topic of applicability of Ind AS. In case you have any questions, please do put it on your chat and we will kind of revert back as soon as possible. Okay? So chalo, let's get started. Now you will have this fairly tiny index, I would say, of your FR where you have just around 35 topics. It's probably one of the biggest of all your topics and it does not really matter for us because this is going to be the first paper and hence we don't just have 1.5 days to prepare. We have a good maybe a week to around 5 or 6 days, and hence we will be able to cover everything even before your exams, though we will, while doing the course, mark out whatever are the LDR questions. And I would also recommend that you keep a highlighter with you, which is a different color highlighter, whichever questions have good adjustments where the entire question may not have anything significant but there might be certain really good adjustments. I will just highlight that and you should also be highlighting the same. So in terms of importance, I'll run through what is your overall weightage. Now from May 24 onwards, your paper has become a 30-mark MCQ paper and a 70-mark descriptive paper. On an average, if you look at the overall weightage of the entire 100 plus another 14 marks with the options, it can be split between MCQ and descriptive, but generally the weightage would be concentrated in a few big chapters. So you will have the chapter on financial instruments called as Ind AS 109, 32 and Ind AS 107. So this will at least account for 12 to 15 marks of your syllabus. Then you will have the chapter of business combination and consolidation. Now they are technically 2 different chapters. So if I keep this separate, okay, you will get weightage of business combination as well, you will get weightage of consolidation as well. I would say consolidation or business combination would again come from around 12 to 14 marks, and even over here maybe around 8 to 10 marks. Now usually what happens is there will be one big question that can either come from business combination or it can come from consolidation. So if you have a big 14-mark consolidation question, then business combination will around 8 to 10 marks. If it's a big business combination question, then consolidation will be around 8 to 10 marks. So this weightage kind of is interchangeable, but combined I would at least expect 20 to 25 marks from these of both of these together, and consolidation includes joint venture and associates as well. Apart from that, there will be a fairly scoring chapter of share based payment. I'll just use short forms now. As and when these topics come, we will definitely put in the one-to-one descriptive detail, but share based payment, also called as Ind AS 102. Business combination, also called as Ind AS 103. Consolidation, also called as Ind AS 110. So share based payment का जो chapter है, that will have around 6 to 8 marks of weightage. So over here, if you look at your index, in your index you will have a lot of Ind ASs, and then you have these big topics. When we look at your overall weightage, financial instruments, business combination, consolidation, joint venture is also kind of an extension of consolidation itself. This will necessarily come in your paper, okay? These chapters will necessarily come. Most of the times you also have questions regarding share based payment as well, and then you have 2 fairly important Ind ASs. One is the Ind AS on revenue, Ind AS 115, and one is the Ind AS on lease, that is Ind AS 116. So these are the topics. Maybe 115 will come for around, I would say around 8 odd marks, sometimes even 10 marks. So we'll say 8 to 10 marks, and this will be around 6 to 8 marks. Now these are the topics which will almost certainly come. Apart from that, there is a topic on theory, that is accounting and technology and professional ethics. which is newly added from the 2024 syllabus onwards. So from this, maybe you will get a 4-mark theory question. But beyond this, if you look at your overall weightage, so over here, these are your core, I would say all of these are your tier 1 or what we call as category A chapters. So this if you total up will have approximately 50% of your paper. On the lower side 20 and 32 and 36 and 8, 44. So on the lower side around 50, to the upper side maybe around 25 and 14 and 8 and 18, probably around 60-65 marks. So around 50 to 60 marks of your paper will come from this. Everything else, that is the remaining section. If you want, you can even write technology and ethics, where you will probably get around a 4 to 6 mark question, either of them. So if you remove this, all other Ind AS will account for the remaining 50 marks of your paper. So in terms of numbers, these topics might appear to be a good 24 topics over here that you see. This will cover close to half of your syllabus, and the remaining from 25, 26, all of these, technology, ethics, all of these will cover the remaining. So I would say the first 24 topics of your index will have around 50 to 60 marks. The next will also have around 50 to 60 marks. So in terms of the sheer number of topics, you will find that we'll just review the last few topics and get our marks. No, that is a risky strategy. It might appear that there are only 25 से लेके 30 or 35, 7-8 topics, but that is in terms of size equal to 50% of your syllabus. The first would appear to be around 24 topics, but again in terms of size will also be equal to around 50% of your syllabus. So I would strongly recommend you give an equal weightage, and especially these small Ind ASs, they come to be relatively more scoring as compared to the bigger topics of consolidation and business combination, which we will not leave anything. But remember, you should not keep these first smaller topics for chance and just focus on bigger topics. And again, you should not just focus on smaller topics and kind of at the cost of the bigger topics. So we will cover everything. You will cover everything during the class. We will ensure that we revise and we are kind of on speed with everything that is there. You will have around 4 tests across the course. I will share that details with you over the course. So approximately every 4 weeks you will have a test. So around 3 to 4 weeks there will be a test, and by that time you should be prepared with whatever is done in class, and we should be in a position to go. Okay? Any questions, any queries, any doubts? Can we proceed? Please be interactive on the chats so that it's more fun while learning. Yes? Okay. Okay, so let us get started. The first topic over here is the introduction of Ind AS, or what we say as applicability of Ind AS. So when it comes to Ind AS applicability, from an exam perspective, you might get a small theory or a small case based question. In your May 24 exams, there was a small theory question. In other exams, maybe sometimes there is a small descriptive or a case based question as well. So let us quickly review what is there on Ind AS. Now when you look at AS versus Ind AS, your entire inter CA, you have done accounting standards, and your entire final CA, you are going to do something called as Ind AS. Now what is AS? What is Ind AS? Now AS is a set of accounting standards which is formulated by our beloved ICAI, and this is applicable usually to companies. However, because it was kind of formulated by ICAI, it was a little difficult for international investors who were planning to invest in India to kind of rely on the financial statements. Like for example, if you were to go into for a vacation, let us say you are going to clear your CA final and someone says that after that we will allow you to go overseas. The typical places where Indians go overseas would be places like UK, US, Australia, etc. Now what is a common thread which connects most of these places is they speak English, or English is kind of understood. However, I mean, there are equally beautiful countries, probably Korea, China, or Japan. Relatively lesser people would go over there because we don't really know the language. So, if I have to just go for a 1 or 2 week vacation, I am a little reluctant to go to a place where I don't understand the language. In a similar way, if there's an international investor who has to invest in a company, now what is the language that a company speaks? Company's balance sheet speaks the language in the form of the accounting principles they follow, that is the accounting standards. So now, when there were international investors who were looking to invest in India, when they saw that the financials were prepared, let us say as per AS, they would be a little reluctant. They would be a little reluctant. They would say that I don't know the language of these financial statements, and hence, let us say we go to some other country where we know the accounting base which was used for the purpose of preparation of financial statements. And as a result, this was kind of pushing away a few international investors. Just a second. So this was pushing away the international investors, and hence a lot of international investors would be reluctant. So what we decided is, let us try to make our accounting standards in the form of an international framework. So internationally there is a framework called as IFRS, that is the International Financial Reporting Standards, which is given by the IASB, International Accounting Standards Board, and IFRS are in application in close to 150 odd countries. And as a result, whether you do a CFA or whether you do an international MBA or a finance degree, almost everywhere you will be taught the basics of IFRS, and hence an international investor would generally know what IFRS is. So we said that let us move to IFRS, that is, let us adopt IFRS. Now the problem is, IFRS was made by an international body, and because these international bodies are developed countries largely, they have made it in the context of a developed economy. Now that is not something which almost every developing economy would adopt. Like for example, in a developed economy, inflation and thereby escalation clause is not that big a deal. However, in our country, because our inflation is relatively higher, escalation clause is relatively important. Or maybe there may be a few other differences as well in terms of thought process, where we say that, well, IFRS we don't want to exactly adopt. In fact, we want to converge to IFRS. That is, we will largely adopt IFRS, however, we will make certain changes which are in line with our Indian environment. Like for example, IFRS says, if you remember in AS 14, tell me in your CA Inter, if there is a difference between purchase consideration and net assets, it goes to goodwill. If it is positive, if it is negative, that means your purchase consideration is, let's say, 80, your net assets are 100. Then there is a negative 20 difference. Where does it go? Please answer in your chats. Where does it go? Difference, if it is positive, goes to goodwill. If it is negative, yes, it goes to capital reserve. So when we say it goes to the capital reserve, that is what AS says. That is what also Ind AS believes. Sir, why capital reserve? Well, because it is a profit on purchase. Usually every profit that you study is a profit on sale. This is like a profit on purchase, and hence we say it's a special transaction, should be taken into the capital reserve, not into the statement of P&L. Now for whatever reasons, IFRS says that we can take this to the P&L account even if it is a profit on purchase. Now this is what we as Indians or Indian regulators do not agree. We say that ideally if it is a profit on purchase, it should go to the capital reserve. And hence we put what we say as a carve out. So there is an IFRS body. There are certain places like inflation, escalation, capital reserve, P&L, where we make certain differences, and we have around 10 to 14 differences, which we have given in a small document. Even if you Google up carve outs between IFRS and Ind AS, we will just mention that. And hence, when you move from AS, you don't directly go to IFRS. You go to Ind AS. Now, Ind AS is the Indian accounting standards, which is largely a replica of IFRS. However, it is not exactly IFRS because there are certain differences, and hence what we have tried to do is converge. Convergence means minimization of differences in order to go to IFRS, and hence an international investor who now wants to invest in India just needs to look at the 10 to 14 page document where there are differences, and thereby if I know IFRS, I know Ind AS. in our syllabus, what are we going to study? Are we going to study about IFRS or are we going to study about Ind AS? Well, we are going to study about Ind AS only. However, for your holistic understanding, wherever there are differences, as an extra point, I will discuss that this is where IFRS differs from Ind AS, though that is not required from an exam perspective. Okay. So now, firstly, we are moving from AS to IFRS. Ind AS kind of is a replica of IFRS except for a few differences. We are moving to IFRS so that an international investor can easily invest in India by looking at our balance sheet and profit and loss account and gauge our performance. Now, to whom should this Ind AS become applicable? Should it become applicable to all the companies? Like when you look at GST, GST replaced service tax or VAT for every goods and services by and large. However, if you look at your articleship, you would see some companies are still following AS, some companies are still following Ind AS, and hence there is a parallel application. Which companies, according to you, the larger ones should go under Ind AS or should the smaller ones go under Ind AS? Well, usually the larger ones will go under Ind AS. Why? Well, because Ind AS is a little more complicated, and hence if you are a larger entity, you can probably afford much more talented chartered accountants like yourself who are CA final pass outs as compared to probably people who are following AS, and hence Ind AS is applicable to larger entities as compared to AS, which is usually applicable to smaller entities. Now, how do you define the larger entities or smaller entities? Now, the standards have given you phases, okay? So, there is a phase-wise applicability which is applicable to general companies except for financial institutions like banks, insurance companies, mutual funds, NBFCs, for which a separate roadmap is given. By and large, your entire syllabus will be for a company like X Limited, which is a regular manufacturing, trading, service entity, not a bank, not an NBFC, not an insurance company, not a mutual fund. For them, we will study a separate framework, but from an exam perspective, you really don't have to worry about these financial institutions. You have to look at the regular entities. So, the phase-wise applicability of Ind AS started from the year 1516. In the year 1516, they said that entities can adopt Ind AS voluntarily. Now, if there's a voluntary application, what do you guys think? Would this be a successful phase? Would a lot of companies move into Ind AS voluntarily? Generally, no. So, this was not very successful. It is like saying that when you have SPOM modules, now, if there is a main subject like an FR or AFM, probably the amount of time that you devote over there as compared to ideally, you should devote the same amount of time even to law or costing. But you would say, Tika, this is not going to count in our marks and everything. It is not in a way mandatory, if I can call it. It is mandatory, but just a loose comparable. So, we would say that voluntary application did not really have a lot of success. So, you said, well, you have to make them compulsory. Otherwise, people are not going to move to Ind AS. And as a result, if I want to make people to move to Ind AS, I'll have to mandatorily make them move to Ind AS. So, what are the limits? The limits for Ind AS applicability in phase 1. Phase 1 of mandatory application will start from the year 1617. In the year 1617, entities which are either listed, like a Reliance Industries is listed, or in the process of listing. So, recently, if you are aware, as we speak, Swiggy is in the process of listing. It is not yet listed, but it is in the process of listing. It has filed its issue document, prospectus, etc. Or even entities who are unlisted. Either ways, for each of these companies, the limit over here that we will look at is the net worth limit. Net worth over here will be your share capital plus reserves minus any fictitious assets or miscellaneous expenses like preliminary expenses not written off, etc. as per the last audited balance sheet date. Are you guys aware in phase 1 what was the limit of net worth? You will not look at the turnover, not look at the net profit, not look at borrowings, nothing. We will only look at the net worth. In phase 1, sorry, Is it visible now? So in phase 1, when we look at the net worth, is it visible now? Yes, okay. The phase 1 net worth limit is greater than or equal to 500 crores as per the last audited balance sheet date, in which case you will have to mandatorily follow Ind AS with effect from 1st April 2016, that is the year 16-17 onwards. Now whether you are listed, unlisted, it does not really matter, at least in the first phase. Now as time passes, you will reduce your limits. You will say that okay, we got in the 500 crore companies already. Now the second phase, which is the phase which is still applicable, all listed companies or all companies which are in the process of listing. Let us say like Swiggy for example, in the process of listing, all of them. This is irrespective of their net worth. We'll have to follow Ind AS. So as we speak, every company which is listed on the BSE, NSE, etc., or if it is in the process of listing, has to follow Ind AS necessarily, because the larger foreign investors will by and large come into these companies, so all listed companies. And when it comes to unlisted companies still have a net worth limit of greater than or equal to 250 crores as per the last audited balance sheet date. So a company like Parle, which is unlisted, even if its net worth is greater than or equal to 250 crores, well, even if it is not listed, maybe big private equity money can come in, like Flipkart was unlisted, but Walmart invested in Flipkart. And hence, if you are a larger entity, which is, let us say, unlisted, then Ind AS can apply. If you are listed, even if your net worth is 50 crores, 30 crores, 40 crores, it does not really matter, Ind AS will become applicable. Are we clear with this? Now, the only exception to this rule is if you are listed on the SME platform of the stock exchange, small and medium enterprise platform. If you are listed on the SME platform, then Ind AS need not be applicable. Now, you would have read a few stories in the last few months of SME IPOs where people who are having a small showroom or a small packing factory are getting huge subscription, but by default SMEs are smaller companies. Their net worth will never be more than 250 crores. So you don't have to worry what if there is an SME which is listed with a net worth of 250 and above. That will never be the case, because if it is an SME, well, it can't have a more than 250 crore net worth. And hence, over here, all companies which are listed or in the process of listing, except for companies which are listed on the SME platform, they will have to follow Ind AS. Are we clear with this? Yes? Okay. Now, there are a few other pointers as well. But before that, a few specific cases. So, when we look at the case over here, when you look at applicability of Ind AS for phase wise, for all entities except for banks, insurance companies, NBFCs and even mutual funds. 15-16 was voluntary application, not very successful. 16-17 was mandatory application, where companies with greater than 500 crores would apply Ind AS whether you are listed or unlisted. 17-18 onwards, I would say, beyond 17-18 there is no other lower limit prescribed, at least till the time you are giving your exam, maybe in the year 25-26, there is no other limit, which means if you are a company which crosses the 250 crore limit even in the year 2026, you are unlisted, you are having a net worth which was less than 250 crores, your business is doing well, and in the year 26-27, your net worth crosses 250 crores, so that is when Ind AS will become applicable. There is no further lower limit given. So even as we speak, for the year 25-26, 26-27, all of these years, 24-25, you will look at the phase 2. So this is a relatively more important phase from an exam perspective. All listed entities or entities in the process of listing, irrespective of their net worth, they will have to follow Ind AS. Limits are not applicable to companies listed on SME platform unless given otherwise. Your company is not listed on the SME platform. If the question says X limited and listed entity, you will not assume it is on the SME platform unless the question tells you that. And second, unlisted entities with a net worth of greater than or equal to 250 crores, Ind AS will become applicable. Now, how do you calculate net worth? As we said, net worth is share capital, which can include equity and preference both, plus reserves. Well, this will include all reserves except for revaluation reserve. This can include securities premium, P&L, general reserve, capital reserve, everything except for revaluation reserve, and if there is any fictitious assets. What do you guys think? Is goodwill a fictitious asset? No, it is an intangible asset, not a fictitious asset. So all fictitious assets, for example, like preliminary expenses not written off, discount on debentures not written off, these are basically expenses. If any, will be deducted, and this will give you a net worth. Remember, share capital over here will be the share capital and reserves as per the last audited balance sheet date, where you will take both the equity and preference share capital. Now, there will be two net worths. One will be the standalone net worth, one will be the consolidated net worth. What do you guys think? Quickly answer. You can write short form as well. S for standalone, C for consolidated. Which net worth should you look at? The standalone one or the consolidated one? That is right. You will take the standalone net worth, not the consolidated one, because when you look at the standalone net worth, that is the net worth for the company individually. Consolidated is a group of companies. What will be included or not included in the group is again contentious, and hence the net worth. In fact, every regulation that you see will be linked to a PAN number, UCIN number. So standalone. So the net worth over here will be the standalone net worth as per the last audited balance sheet date. Now, a very interesting applicability over here would be like in COVID, what used to happen is if one of the members in the family has COVID, the entire family would be quarantined. In a similar way, if one of your companies in your group gets affected by Ind AS, like Tata Steel is a listed company, has Ind AS. Now, Tata Steel has close to 600 subsidiaries. Now, these subsidiaries may have more than 250 crores or less than 250 crores. We don't see. If a company in the group gets affected by Ind AS, every other company in the group, that is a subsidiary, that is a parent, that is a joint venture, that is an associate, will have to mandatorily move to Ind AS. Now, this is the reason why a lot of companies actually move into Ind AS, because if one of the companies in your group get affected by Ind AS, every other company has to mandatorily follow Ind AS. Now, which companies are we talking about? For example, if there is a company X, its parent company, its subsidiary company, its associate company, its joint venture company, all of these will be covered under Ind AS. Are we clear with this? Even if there's a subsidiary, that is a subsidiary below a subsidiary called as a subsidiary, even that is covered by Ind AS. So when we look at this is an important point, point number 4. If Ind AS becomes applicable to one of the entities in the group, it would become applicable to other entities. That is subsidiaries, associates, joint ventures, parent. What is a subsidiary, associate, joint venture? We'll study it at length when you do the respective standards, but loosely, subsidiary is an entity where you have control, like generally more than 50% stake. Associate, where you have more than 20% stake, and joint venture, where there is a joint agreement in a separate entity, for example. So these companies will also follow Ind AS. Now, an important exception over here, which is given by the institute, is on something called as fellow subsidiaries. Now, what do you mean by fellow subsidiaries? Now, over here, let us say there is Tata Sons, which sits at the top. Below this, there is Tata Steel Limited, which is a fairly big company. It is listed, and hence Ind AS will become applicable. But then there is a company like Tata Parts, for example, which is unlisted and which has a net worth of only 100 crores. Now, because Tata Steel is listed, will it have to follow Ind AS? Quickly answer yes or no. Why? N. Will Tata Steel have to follow Ind AS? Yes. Will Tata Sons, which is a parent entity, also have to follow Ind AS? Yes. However, Tata Parts is a fellow subsidiary. One can say that Tata Parts का जो parent है Tata Sons, well, let's say the net worth of Tata Sons was only 200 crores. So Tata Sons would not apply Ind AS directly because of its own net worth. However, its Ind AS applicability is derived because my subsidiary is following Ind AS. I will also have to follow Ind AS. So Tata Sons as a parent will follow Ind AS. However, it will be a derived application. Now, Tata Parts, will Tata Parts have to follow Ind AS? The answer is not mandatory. No, sir, but the parent is following Ind AS. Parent is not following Ind AS because of its own Ind AS applicability. There is derived applicability, and hence there is some important point that you need to remember. A fellow subsidiary need not follow Ind AS merely because Tata Steel is following Ind AS. But sir, Tata Steel is following Ind AS, so Tata Sons will also have to follow Ind AS. Yes, Tata Sons is parent. If it is followed Ind AS, Tata Parts, which is its subsidiary, should also follow Ind AS. If parent was following Ind AS because of its own net worth. If parent is following Ind AS because of derived subsidiaries covered by Ind AS, so parent is following, then fellow subsidiaries ke upar Ind AS is not applicable. It is not mandatory. Remember, if you want to voluntarily move to Ind AS, you can very well voluntarily move to Ind AS. However, Tata Parts need not mandatory follow Ind AS. Are we clear with this? Now, some student who has done a lot of audit would say, sir, but Tata Sons has to consolidate. And hence, for the purpose of consolidation, I will have to have like-to-like accounting policies. Agreed. So, for the purpose of consolidation, Tata Parts ke financials may have to be restated as per Ind AS to the extent practicable. But that does not make it mandatory for Tata Parts to follow Ind AS in its standalone records. Now, one might practically take a view that if I have to restate for consolidation, I might as well show standalone. You can do that on a voluntary basis. As an MCQ or as an exam question, if it comes, the applicability is not mandatory. Sorry, for a fellow subsidiary, if I go to the next page, point 2, Ind AS need not be mandatorily applied to a fellow subsidiary. However, a parent may need to restate financials of that company for consolidation. So remember, if over here Tata Steel ka fellow subsidiary Tata Parts need not apply Ind AS mandatorily. Are we clear with this? Yes or no? Okay. Now let me make it a little more complicated. Let us say Tata Sons had a net worth of 800 crores. It was an Indian company having a net worth of 800 crores. Now what do you guys think? Now, irrespective of what Tata Steel does Tata Sons have to follow Ind AS? Yes, because of its own applicability. Now, what do you think? Tata Parts. Will Tata Parts have to follow Ind AS? Yes, that is right. Why? Because the parent is covered under Ind AS, so the subsidiary will covered under Ind AS, and here the parent is covered under Ind AS because of its own net worth, not derived based on subsidiary net worth. Are we clear with this? Yes, okay. So over here, when we look at the net worth applicability, the net worth over here, if the parent's own net worth is crossing 250 crores, 500 crores, whatever it is, then parent will apply Ind AS because of its own net worth, in which case all of its subsidiaries will have to follow Ind AS. But if the parent's Ind AS applicability is derived, not based on its own net worth, but because of one of its subsidiaries, net worth of it being listed, then the fellow subsidiaries are not mandatorily required to follow Ind AS. Having said that, practically a lot of such companies do move to Ind AS because who will maintain two separate records? Are we clear with this? Okay. So, this is an important point. Again, as we said, we can voluntarily move to Ind AS as well, or you can apply Ind AS mandatorily. So, from an MCQ perspective, you should be aware of this. Once under Ind AS, always under Ind AS. I'll again repeat, once under Ind AS, always under Ind AS. Because when you are moving into the Ind AS framework, you then cannot go out. Sir, when can I go out? Well, for example, I was earlier listed, then I decided to get delisted. I will still have to follow Ind AS. Earlier, my net worth was growth more than 250 crores. I am suffering a lot of losses. My net worth falls below 250 crores. I will still have to follow Ind AS. So, over here, Ind AS can be applied voluntarily or mandatorily. However, if the entity prepares its financial statements as per Ind AS in one of the years, then it is required to prepare all future financial statements as per Ind AS only. I mean, it was earlier, if you remember, when students were given a choice to move from old course to new course. If they move from old course to new course, then there is no looking back. They can't again go back to the old course. So over here, something like that. Are we clear with this? Okay. Now, what if I am not covered under the above roadmap? Then I will still continue to prepare my accounts as per AS. What if I am a company but a Section 8 company. I'm a fairly big Section 8 company. Section 8 company under Companies Act, if you're aware, are companies which are charitable institutions, etc. Like ISKCON, for example. It's a fairly big institution, but let us say a Section 8 company. If ISKCON, which is a Section 8 company, has a net worth of more than, for example, 250 crores, will it have to follow Ind AS? Yes. Remember, there is no exception for Section 8 company. Every company which has a net worth of greater than 250 crores, it may be Section 8 or other than Section 8, will have to follow Ind AS. Now, when you will study Ind AS 111, Ind AS 111 on joint arrangements, there will be two separate concepts. One, there will be a joint operation. One, there will be a joint venture. For the time being, we will just remember that a joint venture will follow Ind AS, but a joint operation need not follow Ind AS. What is a joint venture? Like a separate company like Tata Starbucks have come together in India to form Tata Starbucks Limited, or Air India and Vistara had come to and Singapore Airlines had come together in India to form, let us say, Vistara. All of these would be, for example, joint ventures. However, when we look at, let us say, joint operations, in case of joint operations, when we look at joint operations, let us say, there is no entity in the middle, like your parents jointly own a property. That is a joint operation. You will do a lot of sums on this. So for the timing, I'll leave it over here. That a joint venture, there's a separate entity where you have joint control. In a joint operation, there's no separate entity. You are both owning the house jointly. In case of a joint operation, Ind AS is not applicable. Now, merely because you are following Ind AS, your joint operation need not follow an Ind AS, but your joint venture will have to follow Ind AS. This might sound a little confusing now if you have not done joint operation or joint venture, but nevertheless, once you do it, there will be clarity. So over here, Ind AS is applicable irrespective of whether you are a charitable organization or not, and joint operation need not comply with Ind AS, but sir, joint venture will have to follow Ind AS. You will study this under a separate standard. So this is your roadmap applicable for companies in general. Now, there may be a few special cases that can come, like for example, NBFCs. So when we look at non-banking financial corporations, banks and insurance companies, there can also be mutual funds, etc. But let us say, this is not really important from an exam perspective because most of your sums are not NBFC or bank sums, but nevertheless, if it comes, you should be aware. Now, when you look at banks, RBI has deferred the application of Ind AS until further notice for banks. So, as we speak, Ind AS is not applicable to banks. Now you have non-banking financial corporations or NBFCs. Now largely the difference between banks and NBFCs is, in case of a bank, you can open a saving and a current account, you can have checks, etc. In NBFC, you don't have the facility to open a saving or a current account. But again, you can take a loan from a bank, or you can even take a loan from NBFC, like you have Bajaj Finance, Mahindra Finance, L&T Finance, all of these are NBFCs. HDFC Bank, ICICI Bank, Axis Banks, these are all banks. So when we look at NBFCs, Ind AS Ind AS can be applicable, let us say, to NBFCs with a 2-year lag. Now, as we speak today, when we are in the year 24-25 or 25-26, it does not really matter. But from a theoretical standpoint, NBFCs rolled into Ind AS 2 years later after regular companies rolled into Ind AS. Like for regular companies, we said that Ind AS for listed or in the process of listing with greater than or equal to 500 crores. This was from 1617. For NBFC, the same limit was from the year 1819. All listed NBFCs, so as we speak, Bajaj Finance, Sundaram Finance, Cholamandalam Finance, Mahindra Finance, all of them are listed, irrespective of the net worth, will follow Ind AS from with a 2-year lag, let's say 1920 for an NBFC. And unlisted NBFCs, the smaller NBFCs, if they are more than 250 crores net worth, will have to follow Ind AS from the year 1920 onwards. So, in NBFC, voluntary application of Ind AS is not permitted. If you are covered under the NBFC roadmap, then you will have to follow Ind AS. But generally, the NBFC roadmap was, let us say, with a 2-year delay as compared to the regular roadmap. That is about it. Banks, still the RBI is contemplating. Now, a very interesting thing, which as a special case you would want to discuss, would be, so let's say if you read this for NBFCs, in the year 1819, you have a 500 crore limit. In the year 1920, you'll have a 250 crore limit. This is basically plus 2 years. Voluntary application is prohibited. For banks, it is deferred until further notice by RBI. There's a background to insurance company. There is now internationally a standard called as IFRS 17, which will later have an Ind AS 117. As we speak, there is no such mandatory standard which is applicable, but it is a very, very complicated standard because insurance companies are very different as compared to regular companies, and hence Ind AS 117 or IFRS 17 is fairly complicated. It is not applicable for your 2025 attempts, maybe not even for 2026, but institute has not yet notified. If there is something which comes, we will discuss 117 separately, but uske pehle we have to clear 117 aayega. Uske pehle we have to go out of the institute system, so that gives you more motivation to clear faster. Okay, as we speak, there's no such mandatory applicability, at least for your syllabus. So this is deferred until further notice again by IRDA, like life insurance companies, etc. IRDA still said that even if there is IFRS 17, we are still waiting and watching before we can allow Indian entities to move into Ind AS. So that is about it. For mutual funds, they have started to allow from the year 2025 onwards. Mutual funds can follow Ind AS from the year 2025 onwards. Now, an interesting thing can be for NBFC, if your group company is an NBFC, like for example, you have a company Future Group. Now, Future Group, let us say, has a company called as Future Generali, which is an insurance company, or it might have, let us say, a Future NBFC. So, let's say I look at Mahindra Group and I'll take Future Group both. Chalo, dono example lete. This is just for your overall understanding. Let's say there is a Future Group of Kishore Biyani, where there is a Future Generali करके company है, which is an insurance company. Now let's say Future Group, Ind AS is applicable. Let's say Future Generali is a subsidiary or a joint venture. Will Future Generali, which is an insurance company, will it also have to follow Ind AS, or in its SFS it has to follow AS? Sir, it has to follow AS because the roadmap was applicable to companies other than banks, insurance companies and NBFCs. So I cannot say that the parent company is following Ind AS, so my subsidiary which is not a bank, NBFC or insurance company has to follow Ind AS. Here my subsidiary is an insurance company and hence the general roadmap does not apply over here. So my SFS, I will have to follow AS. However, for the purpose of CFS, I will have to restate as per Ind AS the financials of Future Generali to the extent practicable. Because when Future Group prepares its CFS, it has to largely prepare as per uniform accounting policies, and hence Future Group will have to restate the financials of Future Generali as per Ind AS to the extent practicable for consolidation. But in SFS of Future Group, you will still have Future Generali preparing using AS. Or there may be a company Mahindra and Mahindra Limited, M&M. It might have a subsidiary, Mahindra Finance. Now, Mahindra Finance, let us say, may be an NBFC. Now, Mahindra and Mahindra may be listed. Now, if Mahindra and Mahindra is listed, ideally, its subsidiaries should prepare accounts using Ind AS. So, Mahindra and Mahindra is listed. Its subsidiaries should prepare accounts as per Ind AS. But let us say, Mahindra and Mahindra Finance is an NBFC, and it is an NBFC which is unlisted, and let us say which has a net worth of 100 crores. As a matter of fact, Mahindra and Mahindra is listed, Mahindra Finance is also listed, but this is just for academic discussion. So over here, what do you guys think? Mahindra and Mahindra is listed, covered under Ind AS. Mahindra Finance is an NBFC. It is unlisted. Net worth is 100 crores. Will Mahindra Finance have to prepare its SFS as per Ind AS, or will it prepare using AS? That is right, it will prepare using AS, because the roadmap that we said was applicable to companies which are not banks, NBFCs, insurance companies or mutual funds. If you are an NBFC, a separate roadmap applies. And as a result, for an NBFC, I will look at my net worth or my listing status and thereby apply Ind AS. So over here for Mahindra and Mahindra, for my CFS, but I will have to restate to the extent practical. Are we clear with this? It can even go the other way around. There may be a company Mahindra and Mahindra Limited which is unlisted, which has a net worth of less than 250 crores, and it might have a subsidiary called as Mahindra Finance, which is, let us say, listed. It is an NBFC which is listed. Will it have to follow Ind AS? Yes. Now merely because Mahindra Finance, which is an NBFC, is following Ind AS, what do you guys think? Will Mahindra and Mahindra also have to follow Ind AS? No, they can follow AS, and for which now the Mahindra Finance financials will have to be restated as per AS to the extent practical. Having said that, Mahindra and Mahindra Limited can voluntarily decide to follow Ind AS and prepare Ind AS financial statements as well. I'll again repeat. So moral of the story kya hai? Moral of the story is that when I look at an NBFC, insurance company or a bank, their application is an independent application merely because they are covered under Ind AS or they are covered under AS. Their other non-NBFC, non-bank, non-insurance companies will not be impacted. My application for future generally for Mahindra Finance will be an independent application irrespective of what is happening to my parent, and again for the parent, my application will be general application irrespective of what is happening to my bank or an NBFC subsidiary. Having said that, from an exam perspective, all of these can come possibly for an MCQ. Usually institute will not ask you descriptive questions, but when we look at MCQs, institute wants to ask you such twisted things. Generally in a descriptive question, general law comes. In an MCQ, exceptions, provisos, etc. do end up coming, and hence we kind of cover this. So over here at the end, in case there are banks, insurance companies or NBFCs in a group, they may continue under accounting standards. However, for consolidation, the financial statements may be restated to Ind AS to the extent practical. Now the last part over here is for initial applicability. Now this is not at all important in my understanding from an exam perspective, but if you open the institute study material, there are around 3 questions pertaining to this still there. So we are covering it, but having said that, I don't see a chance of this coming in the exam, but for academic completion we are covering this. So this is pertaining to the first time application way back in the year 2016. So when the first phase came for the year 16-17, we were told that you have to look at the net worth, usually as per the last audited balance sheet date, but here you had to look at the net worth on 31st March 2014. Why? Well, if your net worth as on 31st March 2014 is greater than or equal to 500 crores, then for you, Ind AS will be mandatory from the year 16-17 onwards. So you will be given a fair bit of time, close to 2 odd years, for you to prepare for transitioning to Ind AS. That is from 1st April 16 onwards. Now the thing is, you had to look at the net worth on 31st March 14 for moving into Ind AS from 16-17 onwards. Now that is close to a decade back. As we speak, we don't have to look at the 31st March 14, you have to look at the net worth as per the last audited balance sheet only. However, 10 years back, when you have to decide whether Ind AS was applicable or not, you would have the cutoff date as the 31st March 14 date. If your net worth was greater than 500 crores on 31st March 14, Ind AS will necessarily apply to you. But when will it apply? From the year 14-15? No. From the year 15-16? No. From the year 16-17? Yes. So this was for first time applicability. For some reason, Institute has still kept around 3 sums for this, and hence we are discussing this. But you will take 31st March 14 net worth. Okay, now the challenge over here is, let us say your net worth on 31st March 14 was 600 crores. Then on 31st March 15, you suffered a lot of losses. Your net worth became 400 crores. On 31st March 16, you suffered even further losses. Your net worth became 200 crores. Now the question is, in the year 16-17, please answer, is Ind AS applicable? In the year 16-17, is Ind AS applicable? Usually, if I look at the last audited balance sheet date, 200 crores, Ind AS should not be applicable. But if I look at 31st March 14, Ind AS becomes applicable. Yes, your answer is yes, it is applicable. Why? Because on the cutoff date, Ind AS was applicable. On the other hand, let us say the net worth on the cutoff date was merely 200. Then it moved to 400 and then it moved to 600. Now, in the year 16-17, will it be applicable? The answer is still yes. Sir, so what do I have to look? I have to look at 31st March 14 or the last audited balance sheet date. If any one of the two places your net worth is crossing 500 crore limit, for the first time application, Ind AS becomes applicable. I'll again repeat, in this case, Ind AS is applicable because on 31st March 14, your net worth is crossing. In this case, Ind AS is applicable because on the last audited balance sheet date, net worth is crossing. So, sir, what do I have to look? I have to look at the net worth on 31st March 14 or the net worth as per the last audited balance sheet date. If any of them cross 500 crores, then from the year 16-17, Ind AS becomes applicable. Having said that, this provision is now redundant because for you, maybe if you are giving your exams in the year 2025, for you the relevant year is the year 24-25. If you are giving in the year 26, the relevant is 25-26 and so on for future year attempts as well. So usually Institute is not going to ask you an exam question for the year 31st March 14 or the year 16-17. Hopefully it should not. But in the study material they have given you a few sums, so we are discussing it. Are we clear with this? Okay. So point 1, for initial applicability under phase 1, this is only for initial applicability under phase 1. Net worth on 31st March 14 needs to be checked if the company did not exist on 31st March 14 or the net worth on 31st March 14 was less than 500 crores. We will continue to check for Ind AS applicability based on the net worth as per the last audited balance sheet date. Are we clear with this? Okay. So we will go to the questions on this. From an exam perspective, it is relatively less important. Over here, when you get the books, if you have the books, you can review on the index. We have given number of questions in each of this. There are 3 volumes. Volume wise, the page numbers have been given. We have probably explained you how should be your strategy. We will discuss that over the course as well. That you have exemption. We have given you all the time allocation, etc. We'll come back to this. Approach towards your lectures if you are viewing the online lectures, and there is a scan and learn using QR codes. So over here, next to important questions, we will have QR codes. So that is how you will kind of find an important question. Let us say if there is an important question like this, you will have a QR code. You can scan that code, and I have recorded a short audio message where important adjustments or problems that the students face are kind of covered. You can scan it and play it using any audio player. So you can download a VLC audio player or any other audio player and play using that. So these are files which will play through an audio player. If you have any problems, you can get in touch with our technical team at 79772 99310. Okay. So we will go to these questions. Sir, when is the net worth of 14-15, 15-16 not to be checked? You will always check it. You may not check it if the net worth on 31st March 14 is crossing 500 crores, then irrespective of the net worth, Ind AS will become applicable. But if the net worth was lower, then you will keep on checking for each of the years on whether it is crossing or not. Okay. Okay. So we will go to Ind AS. You can separately refer the description. Right now we will solve. Wherever you have numerical questions also we will solve. Here there are case based questions, so we will discuss, and probably over here we can note down the summary points so that can be quickly referred. Every question we will solve. For case based questions we will discuss and write the summary. For numerical questions we will kind of solve it in our board notes. You can kind of also solve it in your notes if you have the time, or you can, if you are if you don't want to do pen and paper, you can also kind of keep a summary solution next to this for your reference. Printed solutions for every question is given. Following is a snapshot. So we are on question number 1, page number 1. Following is a snapshot of the audited balance sheet of a company as on 31st March 14. This is 31st March 14 study material question. Company A's equity shares are listed on the Bombay Stock Exchange since 2010. Okay. You have been given the balance sheet as per the roadmap. Which phase will company A fall into? Will your answer change if company A is an unlisted company? Again, which phase will company A fall into? Well, for that you need to find the net worth on 31st March 2014. So when I look at net worth, equity share capital plus securities premium plus general reserve, well, revaluation reserve we don't take, plus profit and loss, liabilities also we don't take, and minus fictitious assets. So basically this is 160 plus 200 plus 150 plus 75 minus 80, and hence this will come to what? 505. Now if the net worth on 31st March 14 is greater than 500 crores, Ind AS becomes applicable. From which year does it become applicable? 1617 onwards. Whether you are listed or you are unlisted, your net worth is greater than 500 crores, Ind AS will become applicable. Are we clear with this? So as you can see, net worth is 505 crores and hence Ind AS becomes applicable. Even if I am an unlisted company, if the net worth is more than 500 crores, it would be covered under phase 1 of the roadmap. That is question number 1. I would not really put this as important from an exam perspective because it is 2014. Question 2. Let us say in illustration number 1, the balance of the profit and loss is a negative 375. Then when should Ind AS be applicable to company A? Will your answer change if A is a unlisted company? So you will try to find the net worth on 31st March 2014. Assuming the company is listed, I would say the net worth over here would be 160 plus 200 plus 150. Now profit and loss, there is a negative 375 and there is a miscellaneous expense of 80. So this is what? 360, 150, 375 and minus 80. Probably this comes to around 55. Now because it is less than 500 crores or even 250 crores, Ind AS ideally should not be applicable. At least in the year 1617. In the year 1617, not applicable. Now in the year 1718, I don't know about the net worth, but if it continues to be listed, Ind AS becomes applicable. Why? Because it is listed. Then irrespective of the net worth, Ind AS becomes applicable. However, if I am an unlisted company, then in the year 1617, Ind AS is not applicable, NA. In the year 1718 as well, Ind AS will not be applicable because the net worth, well, I don't know what the net worth is, but assuming the net worth is the same, or at least it is less than 250 crores, Ind AS is not applicable. If it crosses 250 crores, Ind AS becomes applicable. Are we clear with this? Any problem here? Okay, so this is question number 2. Then you go to question number 3. Now the net worth of company B, clearly given as an unlisted company, was 600 crores. on 31st March 14. End of story. I don't need to read anything further. Ind AS will become applicable from the year 1617 onwards. However, due to losses incurred in the year 1415, net worth of the company was 400 crores as on 31st March 15. From when will B apply Ind AS? Please answer. Now the net worth is falling below 500 crores. So should I apply Ind AS later, or will I still apply in the year 1617? That is right. I will apply in the year 1617 because I will look at the net worth on 31st March 14 or last audited balance sheet date. Any of the two should cross 500 crores. So this is because the net worth on 31st March 14 is greater than 500 crores. Now, irrespective of the future years, Ind AS becomes applicable. Perfect. This is question number 3. Now, there is a fairly detailed solution as given in the institute. From an exam perspective, even if you broadly remember the ultimate conclusion, I can safely say that is fine. You don't really need to write all of this literature. Question number 4. When there is a case-based question, you generally explain the law that as per Ind AS so and so. Then connect the law to the given case and conclude. We will discuss that when we go to Ind AS related things. And there is a numerical question how to solve. We will come to that when we do the numerical aspects. As of now, I am just going to applicability. Largely, I expect a theory question or an MCQ question on this. I don't really expect a numerical question per se, descriptive one. Okay, go to question number 4. The net worth of company C, which is an unlisted company, was 400 crores on 31st March 14. So now Ind AS cannot be applicable from the year 1617 because of 31st March 14 net worth. However, the net worth of the company was 600 crores as on 31st March 15. When shall the company apply Ind AS? Now, can I apply from 1617 onwards? Yes. I will apply from 1617 onwards because the net worth as on 31st, we can say as per the last audited balance sheet into bracket 31st March 15 is greater than 500. So basically, long story short, you can say at least for initial applicability, you can say net worth on 31st March 14 or last audited balance sheet. Either of them, if it is greater than or equal to 500 crores, Ind AS becomes applicable from the year 1617 onwards. Are we clear with this? Yes, net worth, NW is net worth on 31st March 14 or last audited balance sheet, either of two has to be greater. So the first 4 questions were the questions which institute was asking for the net worth. The next 4 questions are questions which can even come in your exam. So let us say most of these are linked to group applicability. Let us go to question number 5. Company D is the parent company of group A. So there is D at the top. Company A is an unlisted company having net worth of 60 crores. D ke niche probably there is A which is having a net worth. So A is unlisted and the net worth of A is 60 crores. So Ind AS is not applicable. As on 31st March 14. Satyana, still you are at, but यहाँ पे 24 भी आ सकता है. Let's say you keep it at 31st March 24 also. That's fine. Following are the other companies of the group. Company B is unlisted, which is a subsidiary of A with a 600 crore net worth. Company C is unlisted, a subsidiary of B with a 150 crore net worth. Whether Ind AS will be applicable to company ABC. Now, if I go to see question number 4, I think 4 or 5, there may be D. D ke niche there is A, which is unlisted. A ke niche there is B, which is also unlisted. B ke niche C, which is also unlisted. There is no fellow subsidiary over here. Each of them are sub-subsidiaries. So when I look at the net worths for each of them, this is 60 crores, this is 600 crores, and this is 150 crores. Now, if the net worth of B is 600 crores, over here, Ind AS will become applicable. Ind AS will become applicable. Now, because Ind AS is applicable to B, what do you guys think? Will it be applicable to C? Please answer. Will it be applicable to C? Yes. Because it is its subsidiary, not a fellow subsidiary. Will it be applicable to A? Yes. Because it is its parent. In fact, if they were asking you for D also it will be applicable. Okay, let me ask you an extra point. Let's say A also had, let's say this is extra, not there in the question. A also had another subsidiary, let us say D, which is also unlisted, and the net worth for D was, let's say, 100 crores. Think and tell me, for D, will Ind AS be applicable? No. Very nice. Not mandatorily applicable. Voluntarily, if you want to follow Ind AS, you can. Sir, but A will follow Ind AS. A is following Ind AS because of derived applicability. It is not its own standalone net worth being greater. Are we clear with this? Yes? Okay. So, that is question 5. You can say A, B, C. For each of them, Ind AS is applicable. Are we clear? Okay, next you go to question number 6. Following is a structure of company D. Following is a structure of company D. You will have company D, company E, which is a subsidiary of company D, company H, which is a subsidiary of company D, and you have these, you have the entire structure. Okay, there is D, E, which is a subsidiary, F, which is a subsidiary, G, which is an associate, and I, which is also an associate. All the companies in the above structure are unlisted, and net worth of company E is 300 crores. So, where is this company E? Net worth over here is 300. Basically, it is greater than 250 crores. And the net worth of all other companies are below 250 crores. To which company would Ind AS be applicable? Very interesting. I will mark this as important. You can review this for your LDR. It can come possibly for an MCQ necessarily. Okay. Now, will the subsidiary apply Ind AS? Yes. Will an associate also apply Ind AS? Yes. Will the parent company apply Ind AS? Yes. However, over here, will the fellow subsidiary apply? No. Will the subsidiary of the fellow subsidiary or associate of the fellow subsidiary apply? No. So, basically, which all companies will follow Ind AS? Obviously, company E, direct applicability, and then F, G, and D, derived applicabilities. So, E, F, G, D, that is right. I can see most of you have got this correct, but आपने E नहीं लिखा है. A lot of people have written D, F, and G. अरे बेटा E का तो main applicability, so E have to be written. So these are the companies to which Ind AS will apply. Obviously, H and I, if you want, you can voluntarily follow Ind AS. So Ind AS is not mandatory. Are we clear with this? Yes. Okay. So this is question number 6. Next, you go to question number 7. Again, question number 7, it is a little interesting. You can mark this as important from your LDR perspective. ABC incorporated in a foreign country has a net worth of 700 crores. Let us say question ends over here. It's a foreign company, foreign country का एक company है. Does Ind AS become applicable? Let us say China में एक company है, which has a net worth of more than 500 crores, 250 crores. Do they have to prepare accounts as per Ind AS? The answer is no. Remember, for you to follow Ind AS, you need to prepare financials in India. If you're not preparing financials in India, then how will Ind AS become applicable to you? वैसे तो आप Google, Coca-Cola, USA सबको बोलोगे कि जाओ prepare accounts in Ind AS. They have to do reporting in India. If they are not doing any reporting in India, how can Ind AS become applicable to them merely because they are having a net worth of more than 500 crores, or there may be thousands of companies which are listed, let us say on the New York Stock Exchange, Tokyo Stock Exchange, Shanghai Stock Exchange, they are listed. So we will tell all of them have to follow Ind AS. Okay, if they have to do reporting in India, like Coca-Cola might have a subsidiary in India, Coca-Cola India Private Limited, where Coca-Cola India Private Limited will do reporting in India. So Coca-Cola Private Limited, whatever Ind AS applicability they will see, but Coca-Cola USA does not have to file any reporting in India. So they will not prepare any accounts using Ind AS. Are we clear with this? Now, a company is incorporated in a foreign country, unless given otherwise, a foreign company does not have to do any reporting in India, and if they don't have to do reporting in India, Ind AS need not be applicable to them merely because they are having a net worth of more than 700 crores or merely because they are listed. Okay, if you want, we can write that down as a special case. Point 4, foreign, if you don't have the notes, you can write it somewhere for the timing. Foreign companies do not have to do reporting in India and hence Ind AS is not applicable. They don't have to prepare report only to them. Into bracket, irrespective of net worth / listing status. Full stop. However, comma, if it is given that this foreign company has to do Indian reporting, if it is given that this foreign company has to do Indian reporting, comma, then Ind AS would apply based on net worth / listing limits. Net worth / listing limits. Are we clear with this? Yes? Okay. So, keeping that into consideration, if I go to question number 7, ABC incorporated in a foreign country has a net worth of 700 crores. It has two subsidiaries, X whose net worth as on 31st March 14 is 600 and Y whose net worth is 150. Let's say these are two Indian subsidiaries. Company X and Y would be required to follow Ind AS from accounting periods commencing on 1st April 16 on the basis of their own net worth or on the basis of net worth of ABC Inc. We will say based on own net worth. If they have to follow Ind AS, it will be based on own net worth. ABC Inc. net worth is not relevant. So when I look at ABC Inc., let's say it's a foreign company, let its net worth be 700 crores. It does not really matter. It has two companies, X and Y. X has a net worth of, I think, 600 crores. So Ind AS would apply. Y has a net worth of 150 crores. What do you guys think? For Y, will Ind AS apply? No, not apply. Achha, what about ABC? Well, ABC has to do no Indian reporting and hence Ind AS will not apply because it does not have to do Indian reporting unless the question tells me other way around. Now, let me make your case a little more complicated. Let us say ABC Inc. was not an Indian, not a foreign company. It was, let us say, an Indian company. Will your solution change? Now, will ABC Inc. have to prepare its accounts as per Ind AS? If it was an Indian company, yes. X irrespective has to prepare as per Ind AS. What about Y? Now will Y have to prepare accounts as per Ind AS? Yes, very nice. Now Y will also have to prepare. I think you have understood based on your answers. Great. So over here, this is that extra point. And then you have question number 8. Now question number 8 is on NBFCs. So as per the only question on NBFC, I believe, as per the roadmap, Ind AS is applicable to company X from the financial year 17-18. Okay, it is given to you that it is applicable. Company X is a non-finance company, is a subsidiary of company Y, which is an NBFC. Now Y is an NBFC and X is a non-finance company. And for X, Ind AS is applicable from the year 17-18. Think and tell me. Let us say question ends over here. Will Ind AS also become applicable to the NBFC from the year 17-18? No. Very nice. Why? Because NBFC applicability and other company applicability is different. Perfect. Y is an unlisted NBFC, that is fine. Okay, so this is unlisted, having a net worth of 400 crores. So this is having a net worth of 400 crores. What will be the date of applicability of Ind AS for company X and company Y? Well, company Y, let us assume the net worth remains the same. It is an unlisted company. So I said plus 2. So 16-17 plus 2, that is 18-19. In 18-19, the net worth should be more than, so for this NBFC, 17-18. Ind AS is not applicable. One can say, sir, your subsidiary Ind AS is applicable. That is fine. Subsidiary is not an NBFC, and hence the NBFC roadmap and non-NBFC roadmap is different. 17-18, no. For the year 18-19, assume net worth continues to remain 400 crores only. From the year 18-19 onwards, what do you guys think? Will Ind AS become applicable? No. Why? Because even for 18-19, your net worth has to be greater than 500 crores. Why? That is NBFC's net worth is 400 crores. Now in the year 19-20, the limit will be 250 crores. Assuming the net worth continues to remain 400 or above, will this become applicable from the year 19-20? Yes, assuming the net worth remains the same. So over here, what will be the date of applicability of Ind AS for company X? Sir, company X, to question only has told you. If you see, as per roadmap, Ind AS is applicable from the year 17-18. So for company X, 17-18 Ind AS becomes applicable. And for Y, we will say 19-20 it should become applicable. If Ind AS applicability date for the parent NBFC is different from the applicability date of the corporate subsidiary, which is the case over here, then how will the consolidated financial statements of NBFC be prepared? Now the CFS of the NBFC for the year 17-18 as well as 18-19 will be as per AS. Now each subsidiary has prepared as per Ind AS, so it will have to restate XK financials into AS for the purpose of consolidation. So we will say over here that X will prepare CFS as per AS for 17-18 and 18-19. Sorry, X nahi, Y hai, my bad. Y will prepare CFS as per AS for 17-18 and 18-19. X would have prepared SFS. SFS is standalone financial statements as per Ind AS, full stop. This will be restated into AS to the extent practical for consolidation. See, for the year 1920, this will be restated. I'll again repeat, Y will prepare CFS as per AS for 1718 and 1819. X will prepare SFS as per Ind AS. Full stop. This will be restated into AS to the extent practical for consolidation. If I have to repeat for the year 1920, since the net worth would be greater than 250 crores. Remember NBFC, I will look at independent application. If the net worth is greater than 250 crores, because the net worth was 400 crores. Now one can always argue that I don't know the net worth of the year 31st March 19, assuming that net worth continues to remain the same at 400 crores because it is greater than 250 crores. When I look at the NBFC roadmap, for the year 1920, if the net worth is greater than 250 crores, which is the case over here, then Ind AS will become applicable. Are we clear with this? So over here you can say application for banks / insurance / NBFC based on own limits only into bracket irrespective of non-finance parent / subsidiary companies. Are we clear with this? Application for banks, insurance companies, NBFCs based on own limits only, irrespective of non-finance parent / subsidiary. Is everyone clear? Yes. Okay. So this takes care of this section. You can also add that for mutual funds, Ind AS is applicable. Mutual fund, Ind AS, just for MCQ, applicable from 23-24. So it's not really important, but in case it comes for an MCQ, you should be aware. Mutual funds, Ind AS becomes applicable from the year 23-24. What if the parent was NBFC? I think the parent itself is NBFC. In this sum, the parent itself is an NBFC. I did not understand your question. To applicable Ind AS, we check net worth on, how will we know net worth on? I'm saying this is on the assumption. This is on the assumption that your net worth remains the same. We have been told that this is a net worth. I'm saying 400 crores ka net worth will continue to remain the same. And obviously, you will check the net worth as on 31st March 2019. And we are assuming the net worth on 31st March 19 was 400 crores or 250 crores or above. Okay, the last question, question number 9, is a theory question which came in the exams. There's nothing new over here. It's a May 24 exam question, but list out the entities which are covered under phase 1 and 2 of the company's Ind AS rules as notified by MCA along with the specific date and exclusions if any. So over here, as you see that same theory in phase 1, companies which are listed or in the process of listing, net worth of 500 crores, even companies other than those covered, that is unlisted, with a net worth of 500 crores, and then holding subsidiary, joint venture, associate companies of the above, that is phase 1. Phase 2 comes with effect from 1st April 17. So this is for the year 17-18. Phase 1 comes with effect from 1st April 16. So this is for the year 16-17. If you see over here, companies which are whose equity or debt are listed or in the process of being listed with a net worth of less than 500 crores. They have said less than 500 crores, with more than 500 crores were already covered. Less than 500 crores will be covered in the second phase. Companies other than those above will be having 250 crores and above, and then again holding subsidiary, joint venture or associate. Exclusions, roadmap shall not be applicable to companies who are listed on the SME platform. Ind AS would not be applicable to companies other than listed companies whose net worth is less than 250 crores, and they will continue to follow AS. However, they can follow Ind AS anytime. This is what institute has mentioned. This is your suggested answer. Having said that, in addition, you can also write that Ind AS is not applicable. The above roadmap is not applicable to banks, insurance companies, NBFCs, mutual funds, etc. Institute usually does not bother about banks, NBFCs, insurance companies, or mutual funds. But in case you want to understand question 7, question number 8 can be used as a reference base. We have given a few notes as well, and that should kind of help you get clarity on these special entities. Having said that, in an exam, I see next to a very nil possibility of these special entities coming in your exam. Are we clear with this application chapter? Any problems, any doubts? No? So we'll stop for a 10-minute break, and on the other side we will jump into the main Ind ASs. We'll start with the asset based Ind ASs, Ind AS 16 property, plant and equipment. So be back in exactly 10 minutes. ठीक है? चलो.